So the banks, JP Morgan, these banks were owning enslaved people. When people think about slavery, they think in terms of forced labor, right? Or at most, they think in terms of people as property. But what they don't think about is there's a difference between property and a capital asset. Those people were also a capital asset. All capital assets are property, but not all property is a capital asset. Okay, a capital asset means it creates revenue. Your car, if you don't use it for work, is just a piece of property that you own. But if you are an Uber driver or a taxi driver, then that car is a capital asset. It is creating revenue for you. So all of these enslaved people, they weren't just property. They were also capital assets. They were generating revenue for their slave owners to the tune of $3.5 billion in 1860s money. So if we roll that forward to today, it's like $23 trillion today. To put that in perspective, those human beings collectively were more valuable than all the railroads, all the factories, and all the banks combined. And speaking of banks, the banks actually, JP Morgan admitted that they actually took human beings as collateral. In fact, their records show that they took like 14,000 human beings as collateral for loans. And if the farmers didn't pay the loans, the banks actually seized those human beings. So the banks, JP Morgan, these banks were owning enslaved people.